Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday 5th of September. There has been, in the last 24 hours or so, there's been a continued improvement actually in risk appetite. We've seen that just a number of things have actually gone in favour of risk in the last couple of days really. We've seen the Chinese services PMI data came out better than expected. We've seen moves in the UK Parliament to just restrict the potential for a no-deal Brexit, probability now of another extension to the Article 50 deadline. And also over in China, again, we've seen the China trade dispute taking a little bit of an improving line again once more, with the agreement of a meeting in October between the two sides there to again discuss the dispute. And also news out of Hong Kong that there is an attempt to try and diffuse the civil unrest that they have there. So just generally speaking, that's all added up to an improvement in sentiment. We've seen that the dollar has pulled back in the last couple of sessions. We've seen the Chinese yuan, which has strengthened back again, and we've seen Treasury yields starting to tick a bit higher on both the 10-year and the 2-year, and actually the 2s10 spread moving positively again back up to 3 basis points positive, which tends to accompany with improved sentiment. This morning's moves, we're seeing a little bit of a move back on gold. We're seeing slight underperformance of the yen. We're also seeing slight underperformance of the Swiss franc coming at the same time as the Australian dollar kicks higher. Kiwi dollar, the Kiwi also kicks higher as well. So just generally speaking, this is all playing out as a broader risk appetite improvement. On equity markets, we've seen the S&P 500, which jumped back higher again yesterday into the close. We've also seen S&P 500 futures about 0.6% higher today. So broadly speaking, markets are looking fairly positive at the moment. Now, this could all change on a sixpence again, so let's not get too far ahead of ourselves, but certainly for now, in front of payrolls data tomorrow, I think we're looking fairly risk positive. In terms of data points today, well, we've got sort of this still the hangover of the US public holiday on Monday. We see the US data delayed much of this week, and again today we see the ADP employment numbers coming out. They're expected to just slip slightly back to 149,000. Could that be a harbinger for payrolls on Friday? Then we've also got the weekly jobless claims expected to be 215,000. Again, that's pretty much in line with where we've been for the last few weeks, really. So no surprises there expected. And then later into the session, we've got the factory orders expected to grow by 1% on the month. We've got the non-manufacturing PMI. That is the key data point today. That's expected to be 54.0, up from 53.7, and then after that, we've got at 4 o'clock the weekly weekly EIA inventories expected to show another drawdown of 2.5 million barrels. Will that help to support oil again? Oil, which generally speaking has pretty much been ranging actually over the past month or so. Okay, so that takes me to my chart today, which is Aussie dollar. Now, as I said earlier, Australian dollar has been picking up, and we've seen a big turnaround actually in the past 3 sessions now. Big bullish engulfing candle on Tuesday. Key one-day reversal if you're looking at your bar charts. You can see that came as the market just had been dissipating that downside momentum. You can see these positive divergences on MACD, on RSI, and also stochastics as well. You've seen a bull kiss on the MACD, you've seen RSI above 50, you've seen stochastics accelerating higher. The market is now testing this key overhead resistance, 68.30, 68.20, 68.30. I'm taking that as a neckline of a base pattern now. If you can see the market closing above 68.30, that really does open the upside, because it suggests that the market is around about 150 or so pips of potential upside in a recovery play as that turns into a base pattern. So this is a key crossroads moment for the Australian dollar. You can see today's move, a little bit of a test of that neckline at 68.30, 68.25 being today's high, but the market's pulled back, but that pullback I think comes back into a nice band of support. around 68 figure and back a little bit lower at 67.70 to 67.50 area. I think that we've got a nice basis of support that the Australian dollar will look to use as a chance to buy 68 figure basis of support initially, to push on and attack that neckline resistance at 68.30. So the Australian dollar is improving. Can it sustain that improvement and go on higher to complete that neckline base breakout is the question. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our videos on YouTube, but also go to our website where you can sign up for our payrolls webinar, which is tomorrow.